And if that's okay, we will now move on to our guest speaker, Secretary of Finance, Mr. Aubrey Layne. Thank you again for being here with us today, sir.
No, thank you very much for having me, and hope everybody was safe through yesterday's weather events. I don't think we got quite as bad as someone had thought, but anyway, glad to be here this morning. And Katie's going to be moving the slides for me, so you'll hear me every once in a while say next slide, and I appreciate her helping me with this. First of all, let me say this is the same revenue update that I gave the Senate Finance Committee a week or so ago. So if you heard that, I have a few updates, but I hope I don't bore you. But anyway, I want to make sure you guys knew you were hearing exactly what the administration was telling the money committees and leadership and staff. Okay, next page, please. So what I thought I'd do today is just go through, where we are, of course, how we fit in with the national economy, talk a little bit about our revenue forecasting schedule, which is another one is underway. The budget, and I know you guys got another session after this regarding the session update. And then, of course, the CARES funding, and I hope to have some news for you on that as to how we're going to work with you guys on settling up, if any, of these monies later this year. But I think the only way to really start to talk about this is to say, we had a very, very good quarter from a revenue standpoint, and I don't think anybody would have thought we would have been in this good a stead looking back where we were at the end of last March. So I have to point that out, that while we didn't think we would go down as much as some people were saying, I am a little bit surprised at how well we've held up on this. And we are really an anomaly if you look at our sister states around us. So I'm interested to hear about how some of you guys are doing at the local level, because there's certainly been winners and losers in the way this pandemic has impacted businesses. And I'll get into that a little bit in the presentation. Okay, next slide, please, Katie. As I mentioned, we always take a look at what things are going on in the nation and how it impacts here in Virginia. I guess the big headlines here is that first sentence. We certainly, in the second quarter of this year, our final quarter, that is April through June, I mean, obviously, you all know we had a significant reduction in economic activity, both in the national level and at the state. Most since the Great Recession, back, almost 100 years ago in that. The good news to that, it was followed, and you probably just saw the information hit the news the last couple of days, that we had a really strong third quarter, about 30% up. Now, I wish I could tell you that meant we were back to normal, but as you all know, that's not the case. If you go down 30% on a higher number and go up 30% on the lower number, it still leaves you short of where you were. And that's exactly where we find ourselves in both the nation and the state. We figure we're about 2/3 to 3/4 of the economic activity that was occurring before COVID-19 has bounced back. The question will be whether or not that will continue. And of course, as I mentioned earlier, a lot of this has been congregated in some large employers, at least in terms of how it's impacted Virginia. We still have a lot of small business and a lot of unemployment in the Commonwealth that have been impacted by this. And if you looked at just those sectors, they would tell you they're more like 80% of being off, not anywhere near where they were before. And I think a lot of our efforts need to be in helping these businesses get back on their feet as we shift away from sort of the COVID health emergency, although I'm not suggesting we're out of that by any stretch of the imagination. If you've seen our numbers here lately, they've been increasing. We were averaging a little less than 1,000 new cases a day, and now that's up towards 1,200 or 1,300 a day, and our 7-day average is climbing. And of course, a lot of people were predicting that with the cold weather or cooler weather coming, that we'd see a resurgence there. So the question will be whether this fairly quick snapback, it will continue as we see people adjust to the fact that it appears we're going to be in this at least another year, maybe more, in terms of economic activity. If you look at the job growth, it did pick up during the second quarter and continued into October. However, we saw a lot of people leave the employment area, particularly women. You've probably seen the headlines. Because of schools being closed, it's falling on a lot of our female workers to stay at home or to educate our children. And it's been the first time in many decades that we've seen a recession hit the women in our workforce. So we're seeing that is helping the unemployment number because simply some of them are just not available for employment anymore. So point to all this is that we still have seen a snapback. We're not going to get back to normal, I don't think, until whatever normal is. And I don't think the normal is going to be the same normal that we all enjoyed potentially before. But we'll get back to where we're be able to congregate in large crowds. Those businesses impacted like hospitality, restaurants, theme parks, movie theaters, getting back to anywhere normal until we get a trusted vaccine. And that appears to be at least a year away in terms of getting our population vaccinated to where we would achieve herd immunity. Now, that's been talked about a lot. And obviously, there are a couple ways you can achieve that. One is just let the virus run through the population. And there are some that advocate for that. The other way is to get a vaccine. But as we've done with the revenue numbers, I'm trying to look at the data behind it. And I was listening to an epidemiologist from VCU other night, and he, for the first time, laid out some numbers for me that I could put some variables behind to see about when we might think about this is going to get to the point where we will return to some type of normal activity. The first factor is the efficacy of the vaccine. If you look at the history of vaccines, the first ones coming out are normally around 50% or so effective. Let's hope we get more than that. 75% would be a great result if we got that to be effective. We're now hearing it could be 2 doses of this that are required for this to be the case. And then I remind people there are some not diseases, but the common cold, for instance, we don't have a vaccine. So if we got 50% efficacy, it probably would be normal. Hopefully we'll get more than that. The second factor is that how many in the population will take this, vaccine. And of course, here again, 50% has been the average of our population. I talked to our state health department. To achieve herd immunity, we need about 70% of the population having achieved that. After 8 months, we're about 6% of herd immunity right now. So if nothing else were to happen, if you interpolate that out, that puts us 4 or 5 years away from getting anywhere near 60%. Of course, that's why the vaccine is so important. But if you look at the probability of even if we got a 75% effective rate and 50% of the population, that still only gets us up to about 35 or 40%. So we really need to have a vaccine that's in the 90% effective range and one that's in that about 70% of our people take it to get us in the next year close to herd immunity. So I just mentioned that as trying to plan out here, looking at when do we think we're going to be able to return to some of those industries. And I think it's going to be a while before we get into that. So next page, please. But one of the things that sheltered the state has been our reliance on the federal actions coming out of Washington. Of course, we, like the rest of the country, benefited significantly from the monetary and fiscal stimulus that went into the economy during the second quarter. In fact, the fiscal stimulus of transfer payments in the second quarter exceeded almost 2 to 1 the amount of lost wages across the nation. So it was a significant stimulus, and I believe that has helped kept not only our national, but Virginia's economy. And of course, we benefit from our reliance on defense spending, which is an essential worker classification. And on top of that, we're have large employer in the federal government. Those held up well, and that helps shelter us. We get penalized sometimes when economic activity is great because we don't go up as fast, but we're sheltered in times of distress by our reliance on the federal actions and particularly defense spending. So that's helped get not us to go down nearly as far as much of the country did, and it's helped stabilize that. But having said that, I don't think anybody would have said back in March that our unemployment rate would be twice what it was last year, because we were under 3%, and now we're about 6.1%. Changes every weekly, but in that range. And yet our total revenues for the quarter are up 10%. I don't think anybody would have expected for us to do that. Now, there are some reasons which we'll get into, but I'm just saying we are an anomaly across much of the country and how it's impacted our economy. So let's go to the next page and get into the numbers real quickly. As you can see here, we are up almost 10%, 9.9% ahead of our revised forecast. Now, remember that revised forecast was reduced over the biennium about 2.7 billion, or about $1.35 billion a year. But even with that revised forecast, we're trending ahead of last year. Now, part of that had to do in the first quarter. We had an extra deposit day that we'll have to give back in October, and that's worth $120 million. But we were expecting to see a decrease in revenues, and we've seen an increase. Now, again, a part of this had to do with non-withholding and when our tax, particularly the federal tax payments were due. Even though Virginia did not move its tax due date, there were still many Virginians that decided to pay on July 15th, which is in this fiscal year. And that helped us a little bit in this year too. But the fact of the matter is we still are up almost 10% across our revenues. And I'll get into a little more detail on the next slide of the components of this. This is our withholding tax collections, the payroll tax. This is over 60% of our revenues. And this is held up very, very well. I did mention an additional deposit day, but we have about 250,000 businesses in the Commonwealth that give us, pay us revenues through payroll withholding. And about 95% of those have payrolls of $3.5 million, annual payrolls of $3.5 million or less. But they only make up about 25% of the people who pay the revenues for payroll withholding. The top 1,300 companies in the Commonwealth, about 1% of the companies pay us 52% of this revenue source. And that's our defense contractors, our tech industry, those large employers. So that's why you can't look at unemployment and say, oh my gosh, we were at one time down over 10%, yet our revenues held up. It's because many of those large businesses have actually added people during this quarter. Our tech industry added people, Amazon, Microsoft. The shipyards remained open in Hampton Roads. Many of our food producers remained open. So while we had a very, very negative impact to many small businesses, the large businesses in the Commonwealth, for the most part, fared pretty well. Many of these could work from home and were able to stay open in that regard. So that helps explain a lot of why our revenues have held up. Now, that may not be the truth for localities. You may have a larger reliance on those restaurants and those smaller employers, but that is not the case for the Commonwealth. And so I've been trying to make this point that you can't indicate, not only is Virginia going to trend like the nation and many other states, but the state may not trend like localities. because of how this has impacted different businesses going forward. So I wanted to point that out. And that trend has continued on as these large employers continue to add employees. Amazon added over 10,000 employees in the region, not all in Virginia, but in the Mid-Atlantic region during this because of their expansion of business. And of course, they're fairly high-paying jobs in that. So that's what's helped on the state level, this revenue source. Now, the next slide, please, Katie. I mentioned earlier non-withholding. That is those payments that you have for wealth generation or final payments of income tax returns. You can see that this is last year. I wanted to put that on there just to show that how much money comes in the fourth quarter. This is a fourth quarter projection. About 50% of this revenue comes in with final payments. And you can see in July of this year, the blue line, many of those rolled over into the current fiscal year, but they continued in September. The stock market has rebounded, and therefore, there's a lot of Virginians that are still generating income and paying us through non-withholding because of gains in the stock market. And again, here I point out, the stock market is not the economy. And we can't assume just because the stock market, whether it's up or down, what's going on Main Street, although a lot of people like to do that. We know many small businesses are still struggling with the impacts and the shutdowns related to COVID-19. But overall, those large employers and those individuals who have wealth generation either by selling businesses or in the stock market, stock market goes up or down, and yet people tend to have income generation from those movements, and that is held up, and that has continued into September through the first quarter of this year. I suspect what happened is when the market went down, a lot of people sold and took gains that they had to take. Of course, it's rebounded since then. So we'll see how this pans out. We won't know the final answer until we get to the fourth quarter or next April through June. But next slide here just shows you these large individuals or large tax-paying individuals. There's about 1,000, 1,100 of them that pay a substantial amount of money. And typically tax policy changes impact them significantly. If you remember back in at the end of 13, the Bush tax cuts were expiring, and a lot of people sold stocks and we got a lot of money. It did not repeat itself in 14. But that hasn't been the case in the last 2 years. We've had a strong collection from performance in wealth generation. Whether that'll continue into this year, I don't know. But it really comes down to about 11 or 1,200 individuals or families in the Commonwealth as to how they are impacted. I pointed out between what's going on with large companies and what's going on with some of the large taxpayers, individuals, that before this, our economy was strong, but I don't think the social fabric underpinning it was widespread. It was fairly thin. Back to this income polarization, or a lot of individuals have on the upper end have tended to do pretty well. Those on the lower end have not done so well. And that's why I mentioned when we start going back to normal, I don't know that we want to go back to those. And I'm not advocating one policy or the other. I'm just suggesting to you that that's what's been the trends here in the nation and in the Commonwealth as to how income generation's been going. Okay, next slide. This just quickly shows again that we won't know the non-withholding collections until the fourth quarter. Next slide, please, Katie. We also had activity in individual income tax refunds. Again, some of this people waited to file their taxes on July 15th. So we had some additional refunds in this year, but they're not, when they netted against the additional payments, it was still a benefit for the current year. So overall, net individual income tax from individuals has held up through last year better than we thought, and through the first quarter better than we thought. Next slide, please. And it also continues in the growth in sales tax collections. even though a lot of this happened in the first quarter, we were expecting significant decreases in buying by consumers related to sales tax. That has not occurred. Part of that has to do, we're now taxing internet sales. And if you look at the base that we're collecting sales taxes from now, it's moved from the traditional retailer to a majority into internet sales. And we know a lot of retailers are not going to come back, especially the smaller ones. But it looks like these larger retailers like Amazon, Walmart, and others have stepped in and consumers are buying there. This has also been underpinned by the significant monetary policy coming from the Fed and the fiscal transfer payments from the congressional actions that have put money in people's pockets. That has not happened since the summer. We'll see if another stimulus comes about, but so far the consumer has responded and continued to buy online. And in fact, that it is all of the increase is on online as traditional retailing has gone down. Next slide. We do get a little corporate income tax collections. It's not significant, but that is held up. It's a major, it's not a major revenue source, but so far so good for collections. And one that really is surprising, again here, is that we're seeing a switch from people that are, or I shouldn't say surprising, but we're seeing a switch from people that were employed previously by companies now working for themselves. And they're moving from an individual taxpayer into either filing a quarterly estimated taxes or incorporating, or not incorporating, but excuse me, organizing through LLCs, which show up in the corporate income tax. So we're seeing some additional movements, and that could be helping this corporate income tax payment also. Next page, please. One thing that I think you guys probably are seeing is the real estate market is held up well. And we're seeing that in our recordation taxes. They are up significantly from refinancing and new home purchases. And it looks like that's going to continue at least for the next 90 to 120 days. That's the supply backlog at many lenders in terms of processing applications. And of course, interest rates have remained low. We've seen a little bit of uptick in the last few, couple of weeks. But it appears the Federal Reserve is going to do everything it can to keep those interest rates low. So we expect this revenue source will generate additional revenues also over the next few months. So next slide, please. This sort of wraps it up. I mean, this green line, the third green line points it all. We're up 9.9%, and we were expected to be down 1.8% through this quarter off the revised forecast. Or we're $570 million ahead of the interim forecast. And as I mentioned, we're going to be doing another reforecast, and I would assume this means that's going to be increased. Next slide, please. I also wanted to show if we hadn't reforecasted the original budget, we're actually trending ahead of the original budget. So again, this is highly an anomaly here in Virginia. Our sister states, while Maryland and North Carolina and some others are doing okay, they're not holding up the way we have. And of course, some states that are dependent on oil and gas or other type of revenues, I hate to be in the Dakotas with the shale production being down, Florida, which is reliance totally on sales taxes, they're not trending nearly as well as Virginia has. So it's a good position to be in, although I would tell you it's a little bit unexpected. Next slide, please. We're also seeing a slight rebound in the transportation fund. Even though we're down year to date, this is a 60-day lag. We still think we're going to be down about $800 million over the next 2 years. And of course, a lot of your tolling facilities, a lot of mass transit are still way, way off, as people are not moving around, they're working from home, or they're not using mass transit because of the social distancing requirement working through this pandemic. But I want to let you know that is starting to rebound a little bit, although still off. What's really been picking up, we've seen car sales that were up, they dipped down, but they're coming back, which again is surprising. The consumer remains pretty strong in the economy. Next slide. We're just finishing up. We got yesterday the budget from the special session. We have 7 days to act on that. But in addition to this, we'll have another session here coming up in the first of the year. We're now performing a new revenue forecasting schedule and outlook that's already begun. Of course, our economic indicators are stronger than they were when we did the reforecast. So I'm expecting some uptick in revenue from this forecast. I don't know how much, but again, a lot of that will depend on where we go from the pandemic as we move forward, which is the next slide, please. Just wanted to point out here, as we look at where we go from here, the most significant risks we have are factors related to the pandemic or COVID-19. Our federal and fiscal monetary policy. I mean, there is another side to that. We've gotten a lot of stimulus, and I believe it's the right to do. But for the first time since World War II, our federal debt is now over 100% of our gross domestic product. That puts us in the company with Greece, Italy, and Japan. So there's going to be fiscal policy response to this sometime in the future after we get through this pandemic. We're seeing private businesses now understanding that this is not going to be just a few-month issue. It's going to be with us for a while, and they're right-sizing. We're seeing some of these companies moving to technology and reducing their number of employees. And then there's some long-term trends that we all have to grapple with. Whether teleworking is going to be here to stay, I personally believe it is. Whether real estate, the physical plant usage is the same afterwards. I think there's a lot of discussion on that. The move to online retailing. And of course, our college enrollment. We all thought that, quite frankly, the community colleges would go up, but they're down. And yet our four-year institutions with on-campus living, they're actually up, where they were projected to be down 15%. So there's a whole lot of things we need to think through as we consider our budget going forward. And then the last thing I'll leave you with is structural balance. Right now, Virginia is lucky to have, we have a tremendous amount of reserves, still over $1.1 billion in reserves. But we can't continue to spend on long-term programs without long-term revenues. And that's what structural balance means. And fortunately, we're going to have an upward revision, I believe. There could be some new revenues related to gaming to help us out here. But I think we're going to have to be looking at new revenue sources without otherwise looking at expenditure reductions for ongoing programs. And I'm not suggesting that's going to happen this year because, quite frankly, we've worked very hard not to have any reductions in expenditures or layoffs. But I do believe that as we come out of this, our expenditures will be growing faster than our revenues. And so we're going to have to take a look at whether or not we get new revenues, whether it's from gaming, whether it's from the legalization of marijuana, all those things being discussed. I do believe there's going to be some of the things on the horizon. And let me end with the CARES Act funding. That's the next slide, please. I put in here a couple of slides, but they are outdated. So let me tell you where we are right now. We originally received about $3.3 billion, 200 of a million from the state overall from the CARES Act. 200 million went directly to Fairfax, leaving the state with 3.1 billion. We then allocated almost 50% of that to the localities, which you're aware of. And then, of course, have been busy spending or obligating the rest across various COVID-related areas. We'd hope that we would got some more flexibility, but it looks like we're not going to get another stimulus package or wording, at least not for the next few weeks. But where we are today, working with the General Assembly, we are down under $400 million that has not been actually appropriated. And all of it has been committed. but a little less than 400 million has been actually appropriated by the governor and announced. We have some large things we're still considering. That is the unemployment assistance. Our trust fund, for the first time in many years, is now in the red. We had over $1 billion in there. That is one area that we will continue to put money into. We're still working with the hospitals and state agencies about additional PPE. And then we're looking at some other areas regarding to the helping with localities and your share of some of the pandemic response. So from the state's perspective, we're oversubscribed. We have many more requests than we have the ability to fund. From your perspective, the localities, I got a report just recently, you are about 48%, this was about a week ago, 48% overall has been committed, and committed or appropriated through expenditure. About 78% has been committed that you know you're going to spend it on. And so what we've been looking at, we did get some guidance as to when we have to settle up with the feds. And it appears that's not going to be now needed until about the end of March. So you should be getting a letter from me. The DPB is drafting it now to get a formal communication that we'll be looking for you guys to settle up with us around January the 15th. Give you the entire through December 30th to actually expend these monies. And remember, the expenditure has to be incurred. You can pay for it afterwards as long as it's incurred by December 30th. So we'll be looking to settle up with you guys around January 15th. If you haven't spent the money, we'll ask that it come back. And probably we have a need of over $1 billion in the unemployment trust fund. That's probably where it will go if, in fact, you don't end up spending the money. So that's a quick overview. I've gone a little bit more than half an hour, but I wanted to leave some time for questions. So, Katie, that's my report, and I'm happy to answer anybody's specific questions if there are any.
Secretary Layne, thank you very much for joining us today. Feel free to listen for a little longer if you like. I know you're a busy man and have tons of other obligations, but feel free to hang out if you'd like to.
Well, thank you very much for inviting me. You should be getting this letter from me regarding the dates I mentioned as far as the current CARES Act. And of course, one of the things I was waiting to do is just to see if we'd get any flexibility, but probably need to go ahead. And if we do, we'll follow up another letter. But thanks for having me today, and I look forward to working with you guys in the future.
Thank you very much, sir.
Thank you.